Well, happy Monday, everyone. I hope everybody had a great weekend. We're going to do a little analysis of a particular situation here and using the CSI indicator as well as price action, which talk about a couple of things, see where we're at right now, and just do a quick scan through of the charts. And so, welcome. This is Futures Brizio. It is a little after noon on Monday, May 18th, 2026. And I hope you had a great weekend. Make sure you smash the like button, subscribe, click the link over. I think it'll end up being on the other side of the video to subscribe. And any questions or comments, make sure you leave them down below. So let's jump right in. We're going to just take a quick focus here on the New Zealand US dollar and just talk about what's happening right now. And this is nothing specific to do with the New Zealand USD. I'm just using it as an example. Okay, so we can see that on Friday, we had this bearish engulfing candle that closed right here. It was a very big candle. It is, let's see how big this candle actually is, 76 pips, which is, that's a pretty big candle for one day on a pair like that. And so you can see it opened and then closed near the lows. Now, I didn't take this trade because, first of all, I would never take a trade at the end of the day on a Friday anyways, or late in the day on most days, but certainly not on a Friday. And so I didn't take this, but you can see what happened here today on the current day candle. We're on the day chart here, by the way, and we're using the CSI indicator as I've been using for a long time. And you can see that bearish candle led to a bear signal on the CSI right here. The blue line, which in this case the US dollar, crossed through the orange line, which is the Kiwi. The initial touch on it happened the day before, but that's not technically a signal because it only touched there. You have to wait till it actually breaks through, which comes on the next day, which was Friday. And we have this big bearish candle. Now, today, we see price bouncing and going up. So, why does this happen, first of all? Well, of course, has nothing to do with the CSI indicator or anything else. Just has to do with market participants. We have this big bearish candle on Friday. And so we had people that either were short and maybe sold towards the lows. Maybe they did end up selling late in the day on Friday. And then Monday or Sunday night comes, market reopens, price starts to go up. And now they're getting nervous because they're in drawdown. They figure, oh, this thing's going to bounce. And I got a crappy fill and I'm just going to, I'm going to get out of this. I'm in drawdown. I'm nervous. I'm going to get out. That may turn out to be a wise decision. I don't know. I'm not making any prediction on how this is going to go. I'm just talking about. So what other reasons? Well, there could have been people that were short from anywhere in here that decided to take profit at this level because everybody sees this level down here with this big bullish candle coming out of this level. Price comes down there, comes close enough, and it happens on a Friday. People are like, all right, it's close enough. I don't want to hold this thing through the weekend. I'm going to close it. It could be, whether that was a swing trader or a position trader from up here, or whether there was a scalper or a day trader that, got in kind of late in the session and ended up, again, just exiting the position at the end of the day. And again, it could also be something as simple as, a trend line, right? I mean, you could, start to maybe draw a trend line here. I mean, it's only 2 touches, so it's hard to say whether that's valid, but we do have that. And, you could also say that, again, this is a little support area or demand area, whatever you want to call it right in here, price tag that. We actually have the intersection of what is a potential trend line and this support area. And that's, a confluence for a lot of people to buy off of this trend line or this support area touch right here. And, like I said, that may turn out to be a good move. I'm not saying whether it is or whether it isn't. And so that's why price does that, right? And that's because, and this can especially happen when that candle is very large and when it closes, it taps into one of those key support areas, trend line touches, whatever. If it's a small candle, like if this signal had happened like on this candle right here, you probably wouldn't see that. You would probably see follow through selling the next day. So let's say we didn't get the signal here, but say we did. then this candle probably would have happened the next day anyways, because we've got more room to the downside, and people again are targeting the next logical area, which in this case is the next easily identifiable swing low, okay, which is down here. Okay, but because this happened on this large bearish candle one day and tapped into confluence areas, then we get a bullish candle forming the next day. Okay, and so we've got we still have this bear signal going on right now on the daily chart, but we are obviously in a pullback right now, or a continuation of the uptrend. It's yet to be determined. So we drop to the 4-hour chart. You can see right here, this was earlier today. This was around the 5 a.m. candle today, which is now over. We're now into the next candle, the 9 a.m. candle right here. Is we had basically these two lines coming and touching off each other. I've talked about this as being a good continuation signal, that after a move down, if these two lines come pretty close, sometimes they touch each other, sometimes they just kind of come close and then they deflect away. That becomes a little bit of an art to figure out how close, but this is pretty close. And I would consider that to be a potential end of a corrective area, to see the New Zealand dollar line continue to bend down and have the US dollar pop and turn back up after correcting against each other right here on the shorter time frame, then that's an entry. Okay. Now I have the indicator set to live data. So in other words, these lines are updating in real time. I've talked about that many times. There's risk to doing that because you could get what looks to be an entry, and then by the time that candle closed, there's no longer an entry. Whereas if you wait for the candle to close, there's a little bit better odds. Let's just say that that was a valid signal. You weren't just getting intra-candle noise. Okay, so there's always a risk, but right now I do have this set, the CSI set to live feed, and so these lines will update in real time. And so based on that, earlier, I don't have a screenshot, I should have taken one. This US dollar line was down here, basically touching right on top of this, and they were looking perfectly deflecting away. At this point now, the dollar has kind of leveled off. It's not strengthening as much. I wouldn't say it's weakening, but this little line right here, representing the current price action right here, has now leveled off instead of pointing straight up. But the New Zealand dollar continues to point down. So I still think there's, a decent amount of weakness. But we'll have to see. This candle will close. This candle will close in about a half an hour. And so we'll see how it ends up. Okay. Now, if you look at the price action, here's that corrective move up we saw today on the daily chart. This actually started, right around, so here, let's find the opening candle. Here's the opening candle last night, okay, 5 p.m. New York time, Asian session opens. We do push down, make a little push down, make a new low, and then we come back with 12 hours of bullish price action, boom, 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 right here. And then, again, starting around 9 a.m. this morning, a few hours ago, we start this bear candle. Now, again, this could just be a little pullback, and this thing could continue to shoot higher based on coming off of a trend line or a support or a demand area here. We'll have to see. Right now, it's it's an indecision candle. Certainly, we have about equal size wicks on either side. So there's a lot of indecision in there right now. And obviously, it's a big battle between buyers and sellers. If we put a volume profile on this chart, you'd probably see your, a point of control sitting somewhere right in here, which would make sense. There's a lot of, heavy trading going on here, but it's balanced, right, between buyers and sellers. Okay, we don't have an imbalance anywhere here to push it one way or another. So we have an indecision candle, and again, we'll have to see. I mean, we've got another 4.5 hours before this candle closes on the day, so I have no idea how it's going to close. Now, I did take a short on this based on the 4-hour chart, okay? Now, the decision about what happens here is that when you have one of these, you get one of these CSI signals, and you look down and you say, well, this is a really big candle, as opposed to, like I said, if it was the small one, you probably could go straight away selling at the close of this candle because it's a small candle. There's still a lot of room to the next swing low or the next kind of point of interest. And so you could have like, at least wrote out this candle. But because we didn't get the actual signal until this big bearish candle closed into, again, an area of support or demand or a trend line, a potential second touch of a trend line, then it's very common to see the next candle going to be a pullback candle, at least temporarily, because again, this profit taking or people getting nervous of selling at the bottom and then seeing price go up against them, and they get nervous, they're in drawdown, they close out. That again forces price up when they buy back their short positions. And so I would recommend that if you get one of these signals, look at the candle and look at where price is sitting. If that candle ended up closing at a major support or resistance area, depending whether you're talking about a long or a short, supply or demand area, whatever you like to use, or it's a very obvious trend line touch, especially if you've got at least 3 points now, then I would recommend not taking that trade straight away because there probably will be a bounce the next day and you're going to end up with a bad fill and in drawdown. Now, ultimately, maybe it will move back in your favor, but you really want to, put a stop loss this far away. You said it's 76 pips. 76 pips is not horrible. It all depends on your risk management and how big you want a position size. But, if you take that trade and you have trouble sleeping because you've put a stop loss above a large engulfing daily candle, that's a pretty big risk. So going down to the 4-hour, waiting for a re-entry signal on a 1 hour or 4-hour chart, I would say preferably a 4-hour, because it slows things down a little bit and still gives you opportunity, and wait for a re-entry signal. Well, now your stop loss going back to the 4-hour can be, just a little bit above this candle right here. So instead of if we go back to the daily, let's draw a line at the top of this daily candle right here. Okay. I'll just move this over. Something like that. It's going to look crooked on the 4-hour, but there it is right there. So instead of having our stop loss way up here, and it's probably, let's see, it was Friday. It was Friday's candle. Yeah, so this was it right here. So this was the start of Friday's price action. So instead of having your stop loss sitting way up here above this high, which is that daily high, now I would put it, instead, I'd put it right, maybe 5 to 10 pips above this high. Okay, maybe something like this, whatever. Because now if this candle does end up reversing and we smash through this level, I don't want to be in this anymore. That will prove that either I'm wrong or I'm too early on this trade. The price is going to go higher. And there's no need for me to continue to hold it for probably another 30, 40 pips away. This cuts your stop loss basically in half and gives you a better area to target. Now, many times I don't even let my trade go to stop loss, but even if it did, this is a much more reasonable stop loss, and I would feel comfortable with that if I end up being wrong, which I very well might, because I am in this short. I do have a stop loss sitting just above here, and right now it's really not doing anything. Of course, it is afternoon, so the London market's closed, and so we'll have to see what happens here. But, based on the daily signal, it's still a valid trade. And, getting this 4-hour deflection, continuation deflection here. I always really like to see these big giant gaps between the lines and then they come back together. These often are good trades because this shows the volatility of this move down. The wider the separation, the more volatile and deep that the move was, in this case down. And when they come back together, that's a corrective area usually. Okay, as long as they don't cross over each other, I consider that more of corrective markets taking a pause. Both currencies will move back towards each other. In other words, one strengthening, one weakening. And they come back, and it's like, again, the old magnet theory. If you take two magnets and you put the positive areas together or the negative areas together, they're going to push off of each other. And then that leads to a continuation of the downtrend. So we'll have to see if that's how it plays out, but that's how I look at this. Okay. So there's a lot of market psychology in this. It's not just about using the indicator, but the indicator is your first signal. Okay. Say, okay, well, bearish signal. Again, I didn't take this trade on the close of this bearish candle on Friday. I wouldn't have, even if I saw it, because I wasn't on the charts at that time on Friday. But even if I was, I would not have taken this just because of the time of day and the fact that it closed into a potentially support level, demand level, trend line touch, whatever, from connecting off this low. And so I would wait for the pullback, which I did. And then I was comfortable on the 4-hour chart that was a valid continuation, and I took the short. But ultimately, if I'm wrong, that's perfectly fine too. It's a pretty small stop loss, and I'm okay with that. So there's just a little bit of market psychology, and that's just how I look at these things. And some of it is technical, some of it's just your own intuition. You have to just be able to look at these things and say, what makes sense. You don't need to have FOMO. This is a daily chart. It's going to move very slow. Even the 4-hour chart doesn't move very quickly. And so you have plenty of time to get into the trade. If ultimately this downtrend's going to play out, then, the next logical area to look for a take profit is probably somewhere back near this, at the base of this bullish candle that broke out of this zone right here. I very rarely will ever trade into a extreme of a move. So like, in other words, some people might come and put their stop loss like, at these lows right here, at the low of these candles, like right at the wicks. Probably don't, I almost never do that. And the reason why is because there's not going to be a lot of liquidity at these levels. And if you're not sitting in front of your chart, let's say you're sleeping, you're just away, you put your TP right here at these wicks, price comes down here, gets down here, but you don't get filled because there's no one there to buy back your trade from your short, and you need somebody to buy it from you. And there's not a lot of liquidity down in here. And then ultimately what happens is it bounces, you come back. When you finally get back to your charts, you wake up and you see prices bounce well away from this zone, and you gave back a lot of your profit, and that's a real bummer. So am I willing to give up a few pips in order to put a safer take profit in? Absolutely. Doesn't mean that I'll even get filled here, but I would rather put my TP somewhere in this area and keep it away from where all these wicks are. Obviously, there's a lot of buying that goes on here, but the liquidity is probably thin. And so I'm willing to move it up to, like, say, to this low. And, yes, I give up this little bit if it does make it down there. Now, if I'm on the charts looking at in real time, I go down to a short time frame and I'm seeing price dancing down here. It's getting down here and then it's rejecting. It's getting down here and rejecting. Well, I'll close it manually. I'll wait when I see it push down and touch this area. Boom. I'll just immediately close the trade. But Murphy's Law is that this is probably going to happen when you're not on the chart, and so you don't want that to happen. And just because you were trying to squeeze 10 extra pips out, you gave back 50% of your profit. That's a real bummer. Happens all the time. Happens to me because you're trying to be a little greedy. Now, ultimately, it could come down here and bounce around and smash right through this level and keep going lower. So be it. You wait for another entry. That's all on the next pullback. So, but at least you lock in those profits. You could trail your stop down, but chances are your trailing stop will get tagged out too, because when it gets down here, it'll bounce. You put your trailing stop, somewhere over here. Either way, you're going to get taken out in that area anyways, because there's going to be a reaction off this zone. So why bother? I would just close it out at that point and put a more reasonable stop loss to account for, the thin liquidity that's down in this area. All right. So that's how I look at this. The New Zealand dollar Canadian had almost the exact same setup. I only took the Kiwi, the New Zealand USD, because it's pretty much the exact thing. Here's the New Zealand Canadian. This one has a third touch of the trend line, which is a little different than the New Zealand USD third touch of the trend line. But other than that, it's the exact same setup. So again, this could turn out to be a valid trend line touch, and this thing could rocket right up and head back towards the upper trend line. I connected these highs across here, and we have a low, higher low, potential higher low, high, higher high, higher high, and so that's, and also forget about the trend line. You just look left again, a potential demand area in this level. Okay. Now, um, we did get a sell signal off of the top of this trend line right here on this candle. Okay. And, but you can see on this candle, which is, another kind of big gulfing candle that tapped into the trend line, there was no signal really on the CSI right here. You can see, all right, there was no signal here to go short, and neither on the next candle. So this wouldn't have worked out anyways, but as it turns out, the CSI did not give you a signal here anyways. It did, however, give you one on this one, and so we'll see what happens. This is probably a 50-50 trade because looking at the New Zealand Canadian, the fact that we've got trend line touches, we are in this wedge going up, and we're making higher highs and higher lows. But again, and the New Zealand Canadian can be a very mean reverting kind of sideways pair anyways. You can see essentially we've been kind of chopping inside of this zone for quite a while. We'll have to see if this thing can break through this wedge and go lower. So we'll see. That's why I didn't take the trade on the New Zealand Canadian, why I didn't take it on both pairs. Because yes, if you take it on both pairs and you're right, you look like a genius. Oh, look at that. I doubled my profit. I took it on two, closely correlated pairs. But if I'm wrong and this thing ends up going up and this is a valid bounce and it goes higher, then now you just took on double the risk for nothing. So it's just not really worth it. Okay. So that is, that's one reason. Okay. So now what I've gone and done, I've turned off the live feed. Okay. So now these lines right here, where we see this pair currently, this is what I was telling you before. This indicator I can set live so that the current action on these lines will update with price. But the potential risk to that, as I said, is that you could get a signal in the middle of a candle, whatever candle it is, in this case, the daily, and it looks good. And then by the time that candle closes, that signal is gone. The price has gone back to whatever it was doing. And now you're stuck in a losing position. Whereas if you wait for the candle to close, then these lines will update, and then you can see if there's a valid signal at that point, and then you can decide. Now, on the flip side of that, yes, you don't get that intra-candle risk of your signal being invalidated by the time the candle closes. But again, the flip side of that is you could have a very late entry where you could have gotten in hours before that and been on the right side of the trade anyways and have a much better fill and a much better risk to reward ratio. Again, all comes down to risk management and what you're willing to take on in terms of your win percentage and your risk management and risk tolerance. But if I turn off the live feed, which I have here, you can see there is currently still, a valid sell signal because this happened on Friday, and we'll have to see what happens. If we drop to the 4 hour, okay, then on the 4 hour, we have these two lines are kissing. Now we're still on the Kiwi Canadian. We'll go back to the Kiwi dollar in a second. So here it is. They're flat right on top of each other right now. And so let's see what happens when this candle is going to close in 15 minutes. I probably will be done with this video before that. I don't know, maybe not if we take a look at the other pairs, but we can wait and see. If I'm still recording the video, we'll check it out. If not, very easy. You can go back and look at it and see what it ended up doing. Okay. So right now they're sitting right on top of each other. You can see flatlined, and you can see that makes total sense. We've got another bearish indecision candle going. The market really doesn't know what to do here. Okay. If we go back to the New Zealand US dollar, to the daily chart. Again, on the daily chart, this is our signal from Friday. Nothing's changed today because we don't have the live feed on. Go to the 4 hour. It's just like the New Zealand Canadian, only they're not exactly touching, but they're very close to each other. I still would consider that to be close enough if I was looking for a trend resumption. Okay, now if this ends up closing on the next candle, this orange line ends up crossing above and the blue line crosses down, that would of course invalidate my trade anyways. I probably would have been stopped out by then, but that would invalidate my theory and probably point to a long position, in which case I probably would establish a long position just purely based on that. So I'm going to be flexible. I'm not trying to predict anything. If I'm wrong and I get a signal that tells me the other way, I'll take it the other way. That's perfectly fine. It's not chasing the market. It's just being flexible and understanding that you don't know what price is going to do, and you have to be flexible and also just trust your system too, and trust your indicator, and just trust your own analysis, and understanding you're going to be wrong. Even with this system, probably half the time I'm wrong, but I rarely let my trades get to my stop loss. I will manage them out quicker than that, and hopefully my wins are bigger, and so at the end of the day you're still end up being green. Sorry, guys. I'm still fighting a cold, as I told you from my video last week, but I'm feeling better. I'm still a little stuffy, but I feel much better. I just got to get the rest of this crud out. So, anyways, so let's stay on the daily chart, and we'll just do a quick rundown. I didn't really see much. Now, I've been making videos about which time frame to use the CSI on. I've been looking at the 4-hour, the 10-hour, which I know people like 10 hours, so that's weird, but it's still a reasonably high time frame. It's kind of an interesting time frame, not one that people usually talk about, but on trading platforms like TradingView, you can have a time frame like that. But the 4-hour, 10-hour, 12-hour daily chart, and so I go back and forth. I really do feel, though, sometimes that going to even a shorter time frame like the 4 or the 10-hour is a little bit more about FOMO and wanting to be in the market than just letting the trades play out on the 12-hour or the daily chart and slowing things down. Yes, you're going to get a lot less entries, even between the 10-hour and the daily. When I do my analysis of where the indicator is positioned, I will get often many more potential setups, even just going down to the 10-hour, forget about the 4-hour. And so it comes down to like, well, is it really that you're missing out on trades, or is it just that you have FOMO and you feel like you need to be in the market? And so we're going to stick to the daily for this video anyways, and we'll see. So let's just click through these quickly. Here's the Canadian Swiss. There's no trade right here. We might potentially be looking at a sell short setup at some point with this move down and then this corrective move. This is be something to watch when the market closes today. Pound Canadian, there's nothing. These are spaced out a little bit. This is Euro USD. I was going to say, maybe we'd have a potential short opportunity here, but I'm not really a big fan of that. They're a little bit too far apart. It's kind of the same thing on USD Canadian. We have a potential for maybe a long continuation if we can get these to bend away. But the real long happened back here. This was the real entry was back here. And so this isn't really great. So I keep an eye on it, but it's nothing I'm really like focused on too much. Pretty much the same thing on Euro Canadian. Not really much there. Euro Aussie. Let's see what happens here. This market's been in a downtrend a long time, and it's come down to this previous low, and it looks like it's trying to bounce. Let's see if we can get it to go any further down. You can see there's been a few attempts at this level here since early March. We're on the weekly chart, just zooming out a little bit. And you can see, looking to the left, we've also got this area here. So, let's see what happens with this, or if we're going to finally, break this downtrend, start going higher. But right now, there's no signal. Nothing on the pound Aussie. Nothing on pound Kiwi. Okay, so here's one to watch here. This is the Euro New Zealand for a potential long. Okay, let's see if this plays out. All right, and again, this is almost like the inverse of what we saw in the New Zealand US dollar, which would make sense because it's the Euro New Zealand dollar, so we flipped it over. We had this big bullish engulfing candle on Friday. Naturally, we have profit taking or long liquidations, people covering their longs or trying to sell back their longs here. That maybe, were either taking profit or bought at the highs. Now they're in drawdown. They get nervous, want to get out. And so the signal is still valid. This is exactly the mirror opposite of what we saw in the New Zealand US dollar. Okay. But this is definitely one to watch. Go to the 4-hour. We're going to see just the opposite. Yep, right. We got these two lines kissed together, and we'll see whether we can get a bullish continuation here on this one. So that's one I'll definitely watch. So that's Euro NZD. Okay. For a potential long. There's pound US dollar, nothing there. Here's Aussie US dollar. Aussie US dollar looks a little like New Zealand US dollar. It's almost the same setup. And the 4-hour, I don't think I looked at yet, but we'll take a look at it. It's pretty much the same thing. So I'm going to put Aussie US dollar. The Aussie US dollar and the New Zealand US dollar are very closely correlated. They don't always go together, but oftentimes they do. So we'll add that one to our list. That would be a nice confirmation. New Zealand USD we already looked at. CAD yen. So CAD yen, okay, that's another one to add. Okay, we'll see. Are we going to get a continuation of the downtrend? Like, is this a little corrective move and turn and go down? Or are we going to get a crossover and deviation? We'll have to wait and see when the market closes. Again, I have turned off the live feed. So again, these lines right now represent the Friday close. We don't have today's close yet. And so these lines have not updated. Aussie yen is... So the yen pairs are looking all very similar. His Aussie yen, Kiwi yen is kind of looking the same way, maybe a little bit more bearish, but we'll see. We have this corrective move up again, bullish engulfing candle down, and then a reactive move today. I do have an alert. This is alert I think I set down on the 4-hour chart. Yeah, so if this ends up reversing and continuing the downtrend, I'll get alerted. I'll probably move this line up a little bit. So that one's just kind of like sitting there too. Ultimately, I wasn't comfortable enough to take that trade, which is why I just set the alert. So again, the yen pairs are all pretty much in the exact same spot right now. Okay. Swiss yen, they're all the same. Dollar yen's the only one that had a bullish push off before, but that happened back on Thursday, so there's no trade there now. And same thing with dollar Swiss. Okay. So dollar Swiss is one to watch, right? Move up, right? Bullish move on Friday. Today we're getting a little pullback. So let's see. Are we going to just get a rollover and continue going down after this big bearish candle back here at the end of April? Or are we just going to, is this a good bullish signal and we'll end up just eventually turning back up? You can see on the 4-hour, we have lots of indecision. But it's worth putting that one on the list anyways. Dollar Swiss. Okay. Just based on this, but not a great setup. Nothing on Aussie Kiwi and Aussie Canadian and New Zealand Canadian. We already talked about New Zealand Canadian. Aussie Canadian, again, is pretty much the same thing as the New Zealand Canadian. So we have a lot of very correlated pairs with the New Zealand and the Aussie. That accounts for more than half of the ones I just told you I'm putting on my watch list. Okay, the other ones are the yen pairs. Okay, so it's kind of the New Zealand, the Aussie, and the yen are all kind of the ones that are in flux right now and potentially on watch lists. So that's what I'm watching right now. And so we'll see what happens when we get the candle closes for the day. And then at that point, I can make determinations about whether I want to open any positions during the Asian session. If I do, I tend, obviously due to the market changeover at 5 o'clock, spreads widen for an hour or two, especially if there's any news right around that time. So even if I do decide to enter tonight, it's not usually until about at least 2 hours into the Asian session around 7 p.m. my time. And then, if I think there's an entry, that's about when I take it. So it won't be, right at 5 o'clock or even 6 o'clock. I'll wait a couple hours. because again, spreads always widen at that time, and you're going to get an awful fill, just if nothing else, because of the spread, and a much higher chance of being almost immediately stopped out too. So on any news that comes out. So, all right, so that's that for Forex. But I just want to give that little bit of lesson about context with these signals and why you can't just take those signals in a vacuum. You do have to look at the chart. You do have to look at a couple of time frames. You do have to look at levels, and does it make sense where price is for you to enter straight away, especially on a higher time frame? If you saw that signal on a 1 hour chart and you had a little bit of FOMO, okay, fine, jump in at the low. And, even if price moves against you for several hours, it's probably still pretty reasonable. When you're talking about daily charts, you want to make sure you take the time and get a little bit of that confirmation, because you've got a slow moving candle. It's a daily chart. You got plenty of time to figure it out. There's no need to just slam into there. Even if you go down to the 4 hour, it's still a relatively slow moving time frame, and you've got time to look at it. So don't just be rushing to jump in there. If we look at the currency futures, they all look pretty much the same. We got these big jumps. I already looked at these earlier. So on the daily chart, there's no entries here. On the 4 hour chart, we could potentially look for continuation trades. We've got a bearish euro and British pound. And now we've got, kind of coming together a little bit on both of those. We got bearish price action on all of these. Remember, the way I have this coded is that in currency futures, they're all measured against the DXY, which is the dollar index. So this is the euro currency futures against the DXY and so on. So this is the Swiss franc against the DXY, the Swiss franc being the orange line and the US dollar being the blue line. And so all of these look almost exactly the same. There's a much wider spread between the yen and the Canadian dollar ones. But, the New Zealand, the Aussie, the pound, and the euro all have potential bearish signals, and waiting for our price to divert away to maybe get back into shorts on these, which of course would be supportive of my New Zealand US dollar spot Forex pair. So we'll see how these play out. Again, this is the 4 hour chart. So of course this will update in a few minutes, and we'll see if we get anything, or if these are just going to continue to just be kind of muted for the rest of the afternoon. And I haven't looked at grains much lately. You can't use the indicator, so forget about the indicator for grains. We just move this up and out of the way because it's really not valuable here. On the 4 hour chart, I do like to use the stochastic RSI. There's no signals really here today on any of these, so I have not taken any grain trades actually in a while. So we're just going to stay focused on currencies right now. And so again, my next look will be in a few minutes here. And actually, let's pause the video and I will come back. Okay, so I'm going to pause the video. I'll be right back in about 2 minutes because we will be at 1 o'clock. I know you can't see my clock, but it's 12:58. So I'll be back in a couple of minutes. I will pause the video. All right, so we are back. It is now just after 1 o'clock. And we're just looking at this here. So back on the New Zealand US dollar. Pretty much no change. These lines are still pretty much flatlined right here. So we did not get any kind of like really good indication about this off this candle close. So the next candle close will be the end of the day, and then we will get the daily close at that point, and we'll see what happens there. And it's kind of the same thing we were just talking about on these futures, currency futures. It did update here on the 4 hour, and again, just remain flatline. So again, we will just have to wait until the daily close and see if we get any type of continuation signal, in this case to the downside, when the next 4 hour candle closes, which will also be the daily candle close at 5 o'clock. And so that'll be for an update either tonight or tomorrow, which I will be back for. I'm going to leave it there. Guys, make sure you smash the like button, subscribe to the channel. Any questions or comments on anything I talked about or this indicator, please leave them down below. I really appreciate the support on the channel. Just smash that like button, and I will be back. Have a great rest of the afternoon, and I'll talk to you soon.